Hi, good morning everyone. My name is Ram Dhamija. Welcome to my channel. Today is 25th of May, Sunday, and it's been a eventful week that has gone by, and there have been some news that have come on the weekends as well. So all of it is going to have an impact on our markets. Our markets are behaving all right. There was some period of consolidation for last 3-4 days, but on Friday it looked like all that consolidation is taken care of, and the market started to move up. Just before and on Friday evening there was a news that came out of Mr. Trump announcing tariffs on EU by 50% and on Apple for any production in India. So that made the markets jittery a bit, and the US markets fell, and so did Gift Nifty, though a lot of it was recovered by the end of the session. Yet there is some kind of anxiety, I would say, that is there. Though having said that, as the going says, that the markets don't fall twice for the same reason. So this tariff news might not be such a big deal after all, because it is going to come in effect from June 1st. So a lot of things can happen before that. And the way US markets recovered on Friday night, it doesn't look like it might be a very major issue. Apple stock also fell down on that news of not manufacturing in India or anywhere else. But these are not such big issues for them from a market standpoint per se. What also happened in the market was that the open interest has changed, and open interest now is in green. Not to say that it can't change again immediately and come back into the red. So that is something that we need to keep an eye out on. And I will take you through the charts and see how the charts are behaving and what the charts are telling us how the market might likely behave in the coming one week. So all this and more in today's video, and let's begin. So starting off first with the Nifty daily chart. Now if you look at the Nifty daily chart, we are still hovering around that 24,800 odd level, which was the previous resistance when the market went up, and then it kind of tried to become a support. But in the last 1, 2, 3, 4, 5 day correction that we saw after we made the high of 25,200 odd, is that we went to almost 24,400. So we gave up half the gains of this big candle, which started off from 24,000 and right up to 25,000 in one day. So we gave up half the gains. In fact, if you look at the wick of this candle, it went down to 24,450 odd. So it was a good pullback of 600-700 points on Nifty that happened. And come Friday, we recovered all of that, and we were in very close distance of 25,000. So the next real resistance becomes 25,137, which was the previous top. Now typically these kind of individual tops and bottoms are made out on either a gap up day like this and a huge candle, or a gap down day. So I am expecting, if the market has to take out this previous high of 25,100, then it will be on some gap up or some good news, and so on and so forth. On Monday we are likely to open slightly down depending on how Asia is and so on, but from there we will have to see whether we go to 24,200 or we go to 25,100 odd. So that is going to determine the near term direction which is in place. However, having said that, the way markets have gone up from 21,700 right now, not really sure. We are in no man's land wherein it can go either way. So market is also consolidating and taking time. 2-3 things that have happened during this time is that FIIs have started to sell again. FIIs had become net buyers, and that is what propelled the markets higher, but now they have become net sellers again, and the sell figure is also coming in huge numbers, 4,000, 5,000 odd crores. So we will have to wait and see whether this was a one-day phenomena or this is like going to continue. Also, the global markets is becoming a big bit of an issue, especially the US bond yields. Till the time that settles down, though the US bond yields came down a bit on Friday, but till the time that settles down, there is going to be high uncertainty. Though India is going to be a beneficiary, Indian markets are going to be a beneficiary of US, at least the dollar index going down. But the way yields are going up, it is not very good for US markets. So I will take you through that as well in this next section of the video. Now let us look at what is the situation in Bank Nifty. Now Bank Nifty is much better. It is nearing its all-time high, okay, which was of 56,100, and the correction was also not so severe in Bank Nifty. So Bank Nifty looks like it's in very good form, very good shape, and it might take out all-time high. Now let us look at how the indices are placed in terms of their distance from their all-time high. Now if you look at Fin Nifty, that's almost there. It's just 1.24% up, down from its 52-week high, which it had taken out already. Nifty is now almost 5.5%, which is also great, because Nifty at one point in time had gone to almost 15% from the top. And midcap has recovered very smartly. So midcap had gone down to -20. It is now only -6.94. So this rally again is, being led by domestic money. So you will see that mid and small caps have recovered very, very sharply. And all the other names like infrastructure, pharma, metals are doing all right. Nifty Next 50 is the one of the weaker ones. It had gone down to -27% from the top. Now it is recovered half of that. So it is basically 16-17% already recovered from, in fact, almost 20% recovered from the bottom it made. MNC is -14%, FMCG -15%, public sector enterprise -15%. IT is the lagging one. It is a -18%. And Alpha is at -20, and Momentum, which is not taking off, is at -21%. So Momentum, to reach its all-time high, will need 27% to go up. Momentum had gone to -36%, 37%. It was completely crushed, but from there it is already up 20-25% from the bottom, and it will only start in the next bull market. Momentum, Alpha, etc. Start when the previous all-time highs are taken out. Then they really start to outperform. However, if anyone would have bought Momentum, Alpha during the fall, they would be sufficiently rewarded, because these indices have recovered the most from the bottom. So that is the nature of these indices, that the way they behave is that they're high beta indices. When markets go down, they go down more than the markets. When markets go up, they go up more than the market. So their movements are much more accentuated rather than the broadline indices, and hence it makes sense to have some of these in your portfolio. That just reminds me, if anyone is keen to make a mutual fund portfolio having all these indices in place, or market cap weighted indices in place, then they can contact me through the Google form. I help people build a mutual fund portfolio. I'm a mutual fund distributor, so you can buy mutual funds through me, and I help you make a very solid mutual fund portfolio, which will protect you on the downside, and while on the upside we will try to capture the maximum upside also. So please fill up the form in the Google link, and I shall get back to you. There is no charge for this service. These indices, Momentum and Alpha, as I said, are brilliant indices provided you know how to play them. One should not buy them on the top. One should not buy them when they are not corrected. But when they correct, they go down by 30-40%. And if you buy that during that period of time, and if these indices end up giving you the normal return that they give, which is about 20-odd% on an annualized basis, then you can look at a CAGR of 25-26% also if you're bought at the absolute bottom. But then no one knows the bottom, so how do you play it? So that's where the trick comes in, how to play these indices. That's what I help people decode through a system that I have developed. Now coming to the open interest, how the open interest is placed. This is Nifty open interest. We are pretty much at open interest of 1 now. 14 crore calls, 14 crore puts, but that is not to say that it can't change to 30 crore calls and 14 crore puts. It can do that as well in the coming. So Monday is going to be crucial to see how the open interest changes. But it was 0.49 last week, and from there it is now almost 1. So we saw when it was 0.49 how the markets corrected. I had told that in all my videos also last week. Now it is at 1.2, nothing to worry as of now. But let's see, if Monday this changes again to 0.7, 0.6, then we will have to keep an eye out on. Right now calls and puts are evenly matched. Even if you look at in terms of the close strikes, it is evenly matched at 0.96. So there is 24,500, a lot of puts written, and 25,000, a lot of calls are written. So that's where we are. In terms of the straddle premium, it is very interesting. So straddle premium opened and closed pretty much at the same place. In fact, straddle gained a bit. We opened at about 395 odd on Nifty, and it just shot up after opening. So this is if you see over here, somewhere over here. Yeah, so we opened at about 390 odd, and then the straddle just went up. So it was a very, very rough day. Friday was a very rough day for option sellers, and that is where your realized volatility is really higher compared to your implied volatility, and that is what is not letting people make money by selling options right now. And we closed at 405. So anyone who sold options on Friday, including myself, were cooked basically, because there was just one side movement and the puts were simply not decaying, or decaying very less. So it was a lost day on Friday, and you have to take such days in your stride and ensure that your system delivers. Yeah, so I was talking about the ATM IV. So ATM IV is at 15.6. Realized volatility is much higher, and India VIX is at 17.3. So that is where we are not able to as an option seller. You won't be able to make money if you are playing delta neutral strategies over here. But having said that, 400 point premium is good for 4 days, and if things cool down a bit and if there's not too much turmoil in the global markets, then we just might end up realizing good money from options. Now, what are the other news that happened over the weekend? Very good news. India surpasses Japan to become the 4th largest economy at 4 trillion to overtake Germany soon. So this is one good news for all of us. We should be proud of this, that India has become the 4th largest economy in the world. And this is how our country will prosper as we go along. Slowly and steadily we'll become number 3. We'll overtake Germany probably. I think in a couple of years, 1.5, 2 years, we should be able to do that. And from there, the next biggest one is China, which is at 19 trillion right now. So the gap is huge. So this is how the economies are placed. So if you look at the world economy is at about $113 trillion. United States is about $30.5 trillion. China is at 19.2. Germany 4.74. India is 4.187 trillion dollars. And look at the growth. So 22 we were at 3.4. Then 23 we were at 3.5, and this year we are at 4.18 trillion dollars. So which is great news, and we are number 4. It's quite nice. The top 10 are Japan, United Kingdom, France, Italy, Canada, Brazil. So we are much ahead of all the other big economies of the world. So yeah, this is the entire list that is there. So it feels proud to have such a good sized economy. What are the other news? Trump's 50% EU tariff bombshell. Are we heading to brutal trade wars or high stakes economic showdown that could shake global markets to their core? So this was the headline in Economic Times after the EU tariff, which we've already discussed. And S&P 500 week end lower as fresh trade war fears bite. So this is another issue that has propping up, but the good thing is that the S&P actually recovered a lot of the ground that it had lost. This is the Apple share, which went down 3% after the news of the tariff hitting in, and it was down almost 4% at one point in time. So it also kind of recovered a bit intraday. So this is what it is in terms of the news flow. Now coming into how the international markets are stacked up and what does it mean. So S&P VIX increased, shot up by 10%, clearly on the news of the tariff, and it is now above 20. It had gone to 17. So this is not good news. And when the VIX starts to rise, then it's a problem. Similarly, US 10 years at above 4.5. It is not coming now down below 4.5, which is not great news. And US 30-year paper is at 5%. So these are worrisome signs. Some are saying that 10-year might go to 5% as well. So let's see how that plays out. Nasdaq corrected, as mentioned. It corrected by almost 1%. It was down almost 2% at one point in time. And Bitcoin is at 107. It had gone to 111. It has corrected a bit. US dollar index is now 100. Looks very tough for it to cross. It's at 99 now, which is good news for us because a lot of flows might come into our markets if our currency remains stable. Brent oil is at 64, behaving very well, and USD INR is at 85.2. Silver is at 33, and gold is back at 33.57. Now I'll just show you the chart of gold. Gold is making highs again. This just slightly less than 3,500. It had reached 3,500 at one point in time, and from there, it has corrected. It corrected to 31.20. I don't know how many of you actually bought it, but to all my clients, I had suggested to have a look at it, when it was down to 31.40 odd levels, because gold, whenever it corrects 8 to 10%, it's a good time to add gold to your portfolio. So some of my clients did add to their portfolios and positions on gold. And gold, as I have mentioned, should be 10% of your portfolio, because it helps you protect against the equity market fall, and also it serves as a hedge and a currency hedge, because whenever the currency is going down, the gold will go up. So gold should be a part of your portfolio, at least 10%. And now it is pretty much back to all-time high. So anyone who had the courage to buy gold when it was 8-9% down just a couple of weeks back would now be sufficiently rewarded. So that's it from me now for today's update. Markets are looking all right. Markets don't look like they want to correct, because at every correction, strong buying is emerging. However, having said that, we need to keep an eye out on global markets and see there's some geopolitical risks also that might start to show up, like in the Middle East, Iran-Israel conflict, etc., which might have a bearing on the crude prices, and also the US debt and the bond yields, and then this tariff news. So a lot of things to watch out for as we go ahead. Thankfully, at the domestic front, there is no particular worry and no particular big event coming in. So that part is fine. And the markets look all right until there is a complete breakdown on Monday, which I'm not anticipating. But let's see how things play out. So that's it from me now. If you enjoyed the update, then please do subscribe to my channel. Please share the video with your friends and family. And I shall see you soon with another update. Till then, take care. Bye-bye.